Hi there, traders. This is Brad Gilbert with the early update for the Daily Market Insight for Friday, the 22nd of April. All right, now just having a look at the markets. Hopefully this starts to make sense to you around traders who aren't sure what's going on or how things connect. I've been saying this for some time that this aggressive inflationary cycle that the US is in, they're going to have to raise rates. We're going to see equities go up, go down. And I was talking about this a couple of days ago. If you check the previous videos, the US equity markets rebounded. It's a bit of a reporting season. It was just like a artificial bounce, right? And you start to see the format for what the Fed construct and guide the market into will not change on a daily basis. They get pushed into a corner and they execute the plan. It's going to take like a year, right? So this is the key part to it. And Wall Street slides, no surprise at all to me. So this is one thing that you just have to understand, because if you're patient, right, and you wait for the opportunities to come up, you will get that cycle. And now I'm getting a lot more of a like a gut feel for what the cryptos are doing as well. They are pretty much following the equity markets, not 100%, but like about 90% of the time. So keep an eye on that relationship and see how that develops. So equity markets smashed, okay, risk off profile, euro, sterling, Aussie, Kiwi belted, and the dollar rallies, right? This is a pure, easy trading environment once you see this set up. So this is what patience is all about. You don't sort of sit there, flog yourself all week. Equities are up, equities are down. Don't get caught up in the noise that the market will create, right? These news services, Metastock, Bloomberg, all of them for that matter, okay, they're just coming up with different news things to fill the gap. They're like fillers. So don't get sort of too bent out of shape and sort of think, oh, I don't know what's going on. You know what's going on. The Fed are raising rates. The dollar's going to rally. Equity's going to get hit. So when you are looking at the market, just wait for that profile to come back into play, and it's on. The markets just don't go up and down in one day. All right. So what we're seeing at the moment, like it's a pretty easy trading environment, as I said. And then all you need to do is, from this point on, right, if you come over back to the charts, is actually go through your technical analysis, right? This is the part. Why are we doing the analysis? Because we're trying to find out where to get in and out. See if a pair or an instrument here has a great technical setup, and you're looking for support and resistance, and that's all you're looking for, because we know the direction of what's going on. Look at the big change here too. Commodities, the commodity index has been belted, right? Absolutely flogged. As I was saying there, you've got, let me just change the color of the pen there. You've got the S&P, NASDAQ, and Bitcoin following pretty much the same move here on the equity markets, right? That's a really good sign. Why am I saying that? Because it's something tangible that you can hang on to, right? So depending whether you're trading equities or something else, or cryptos or commodities, whatever it is, right? The dollar rebounds. So as we go through this cycle where the Fed is going to be raising rates aggressively, right, there are going to be periods where the dollar just drifts off. The market gets so long dollars that it just actually goes down. Doesn't mean the dollar is going down. It just means we're in the cycle of that sort of period. Check out the movement here on euro. Pretty sort of wild stuff. Gold's steady, and oil has consolidated around 103 there as well, right? So that's just your global setup on the markets. Now, if we drill into the specific asset classes like Forex, okay, let me just click some of these charts across. The idea, once again, it's not about doing anything except you're looking for direction, and we've got sort of direction here on a lot of these instruments, like this big clean out to the downside. Aussie and Kiwi should play massive catch up to where euro is, especially with those commodities coming off. Strong dollar perspective. If anything, sterling is already down here, and euro was already on its knees before. So as I said, there's a bit of a rebalance here between the value of the euro, Aussie and Kiwi, and sterling. And that's because Aussie and Kiwi have been so elevated, they are now catching up to where their value is relative to, say, the euro. And all you're doing is now coming back across, redraw your trend lines, and then start to work out where the next trading opportunity is. Now, at the moment, right, we do have a strong dollar perspective, right? So, and you can see that across the board here. It makes you very comforting. I mean, the price action here on dollar CAD is quite wild. as it is on euro. Now, if you avoided this, right, it's like making money, right? You don't have to trade every day to pick off the currency. So you can see here sterling coming back to that resistance line. If anything, probably the nicest trading FX instrument besides dollar yen, which I still think could possibly go up to 145, 150. And that's where we are on the currencies, right? Strong dollar. Come back to the equity markets. This is where it's going to get, as I said, there's going to be cash in this, right? Don't shy away from the equity markets. Okay, the volatility index is popping higher here. Okay, as you know what, it's like alarm bells, right? So you see the equities get belted a couple of percent. The alarm bells goes off because everyone's like, oh my God, that's crazy. It's terrible. It's actually, it's something that should happen, right? The DAX is back up here right on resistance. Tell you what, you've got to be looking at the DAX. The stocks, European stocks, well, I tell you what, that's tough price action. FTSE right on highs, and so is the All Ords. When you look at the US equity markets, okay, still trading mid-range, but we are starting to see some volatility. You're looking for them to break down through these support levels to really get a good, strong grasp of what's going on. And the Nikkei is just following those US equities, right? So at the moment, there's things happening. I think it's going to develop more. You come back in and start looking at the cryptos. As I've been saying, like these are, to me, starting to have a bit of a profile and a bit of a relationship with the equity markets. Although the equity markets, even it's quite rare that the equity markets are a little bit more volatile. So keep an eye on these instruments if you are trading them. I mean, I keep sort of saying this, we are going to be adding these very shortly, but and then they'll become a real relevant instrument. But I know a lot of people are trading them, so it's something that you need to sort of have a grasp of what's going on now. Fundamentally, right, the cryptos are a bit more impervious to the twos and fro's of what's going on with the central banks. So just keep an eye on that as we go forward. But, you know, to me, they all sort of generally work in unison. There's a couple of pairs here that are out of whack, a couple of the crosses. And that's where we are, because it's when you come back and we look at the, say you're looking at the commodity markets, for example, you know, you can sort of work out which ones are moving, which ones aren't, try and isolate the pairs that have got extreme levels. If you look at across all asset classes, key commodities here. I mean, this is the advantage of actually having an instrument or a news service that actually can tell you what's going on and where things are relative to everything else, right? Oil is definitely something that I've seen some traders making some good cash out of. All right, so when you come back to looking at where the next sort of driving force is going to be, right, we are looking specifically at, you know, say bringing in the fundamentals. What have we got to look forward to today? Well, you got UK retail sales figures. All right, is that going to impact? I still think the dollar is the big game here, the big picture. But keep an eye on these a couple of extra bits and pieces. You got Canadian retail sales there as well. There seems to be some S&P Global PMI data. I don't know how that's going to go, but sterling and dollar CAD will be in the frame. But really, the main story here, if I just come back to the main page, is the US equity markets, right? Once again, connecting to the theme. Why are they going down? Well, it comes back to the central banks and what they're doing. And we're talking about power, rate views, support aggressive hike path. That's the path, right? So that's the theme. It doesn't mean it's in the market every day, but it will be the overriding longer term theme at the moment. So don't get caught up in price action going against the trend. Wait for opportunities to go with that strong dollar, or if you're an equity trader, look for those opportunities to get short equities. Like the bounce a day or so ago, perfect time to be looking to get in, although it is still trading mid-range. Right at the moment, we have a risk off profile. So you would be looking to sell Euro, Sterling, Aussie, Kiwi, breaking support or rallying back towards resistance, and opposite for the dollar pairs, right? It's pretty easy that way. The commodities, as I said, the index is getting touched up. So just be aware, Aussie and Kiwi should remain sort of with a downward bias, not only from the equity markets, but also from the commodities as well, right? Same for Kiwi, and CAD's going to be, well, they're going to sell CAD, buy dollars, so that's why dollar CAD's up there as well. All right, hope that makes sense. I'm just trying to like explain to you what's happening and why it's happening. Like this is, as I was saying the other day, the overriding theme from the central banks doesn't change. It's not like a daily thing. They wait months and months and months to be backed into a corner, and then they start to execute the plan. It can take 6 to 12 months. So that cycle is the one to be looking for. When it kicks in, that's when you get into the positions. All right, guys, have a good day. All the best. Cheerio.